My personal rate of return earlier this year was negative 8.39%. Man, I lost money. Drum roll, please. Let's see how I did this year. Whoa, I had a percent rate of return. Hey guys, Melissa Dargan here, and welcome to my YouTube channel on personal finance. In today's video, we're going to review how the TSP did in 2020, do a little bit of a recap on all the funds, and we will also cover 2021 investment strategies based on the kind of investor you want to be. I'll go over how to check your TSP account performance and check your 12-month rate of return, aka the gains or losses, and hopefully you're seeing gains, which means you're making money. Then I'm going to review how the different funds performed this year. Which ones were the 2020 winners with the most gains? Which ones were the losers who just underperformed? I'll go over the different funds so that you can review how it went in 2020 and possibly look to strategize what 2021 looks like. And finally, I'll cover how to think about 2021 investing strategies in the TSP based on the kind of investor you are. Before we get started, you know what to do. If you find this video helpful, go ahead and hit that like button and subscribe to my YouTube channel to learn more on personal finance and be updated whenever new videos are released each week. Now grab your favorite drink and join me as we learn about how the TSP did this year and how to plan for 2021. Cheers! Quick reminder, I am not a TSP advisor. I'm just sharing my personal thoughts based on my experience as a former government employee who has a TSP account. All right, time to get started. So that we could review how the TSP did together, I took out my computer. So here's the TSP dashboard. First up, how to check your TSP performance. First question, do you even know how your TSP did in the last 12 months? And if you don't, here's an easy way to find out what your 12-month rate of return was. You may be wondering, what is a rate of return? And a rate of return is a gain or loss of an investment over a specific period of time that is expressed in a percentage. So now to find your rate of return, it's pretty straightforward. Check the middle section right over here. And in this area, it's going to show you your balances by fund. As you may already know, in the TSP, you're unable to invest in individual stocks. So you can't invest in things like Tesla or Johnson & Johnson. Your only options are funds, which range from things like short-term U.S. Treasury securities, the G fund, or index funds that follow international and domestic markets. Now, if you're looking at this middle section, the top funds are the life cycle funds, and below are the individual funds. Now, if you're thinking, what the heck are all these funds? Check out my TSP 101 video, link is above, or I'll include it in the description below, so that you can get the basics of the TSP and learn what the different funds are. For the too long didn't read version, there are individual funds, aka the core funds, which are at the bottom. And then there are the life cycle funds, the L funds, which are a diversified mix of the core individual funds. Keep in mind that each life cycle is based on the year that you want to retire. And if this recap version is still confusing, go ahead and check the TSP 101 video, link is in the description below, so that you can be caught up on the basics of the TSP and understand the different funds. Now, time to see how your TSP portfolio did this past year. All right, so on the main dashboard, you're going to see go on the account balance by fund tab. Then in blue, below the chart, is view your 12-month personal investment performance, PIP. You'll want to click that. Clicking on this will give you how your TSP account did. Go on, click it. I'm going to go ahead and do it too. Drum roll, please. Let's see how I did this year. Whoa, I had a 15.2% personal rate of return. And if you're thinking, is that good? Is that bad? What do I compare it to? Let's take a look. Looking at my quarterly statement from January 1st to March 31st, 2020, my personal rate of return earlier this year was, negative 8.39%. Negative. Yup, I lost money. I do have to keep in mind that at the earlier part of the year, in March, there was a severe downturn because of the global pandemic. Thanks, COVID. But since then, if we're looking at where the stock market has gone, there has been a steady bounce back. Another factor to consider in thinking about whether or not the 15.2% is good or bad is we should take into consideration that financial sources typically expect a 3 to 8% average return per year. So, finishing the year off with 15.2% overall is a big win. I'm one in the positive versus the negative 8.39% I was in January to March, and I'm beating market expectations on average per year. Feeling good about ending the year positive. The market can be volatile, and that's why saving for retirement is a long-term strategy. In the short term, you could possibly experience losses the way I did in Q1, negative 8.39%. But by the end of the year, I was able to recoup those losses and gain 15.2% in my investments. So when you're thinking about it and you're saving for retirement, just imagine how much you can be saving and how much it will grow the longer you keep investing. Quick aside, this is why it's important to start saving from your first paycheck. I did a video on why you should save early and consistently. Link is up at the top or in the description below. Make sure you check it out to understand why it's important to save now and how that's going to benefit you in the future. So now that we checked the 12-month rate of return, how did you do? Did you get higher than 15.2%? Lower than 15.2%? Go ahead and share some of your strategies in the comments below. I would love to learn if there's better investing strategies out there that would yield higher results, aka more money. Next, let's review how the different TSP funds performed. Which ones were the winners that had the most gains? Which ones were the losers that just underperformed? We'll dive in to make sure that you are getting the most out of your funds and you know which funds are performing well. Let's start with the individual funds. Let's go on the website, learn about fund options, individual funds. All right, these are the core funds. Looking at the GFCSI funds, we can start to see which funds had the best and worst returns. Now, let's reveal the top 2 funds which performed the best in 2020. In looking at the top 2 performers of 2020, let's go ahead and drop the lowest year-to-date returns in 2020. All right, dropping G, dropping I, dropping F. We see that at the top is the C and S funds. The key percentage returns here that are important are the year-to-date, 1 year, last year, and lifetime. In general, the CNS funds, as you can see here, tend to outperform the other individual funds overall. Now, for the bottom 2 worst 2020 performers, let's find the ones with the least return on your investment. And it looks like G and I. The G fund is stable, but with less risk, there is less reward. In this case, minimal returns. With the I fund, what's crazy about this is it has a low return but high risk. Seems like a bad combo. Now, let's just evaluate the high risk funds so that we understand what's going on here. Let's look at the C, S, and I funds. For the riskiness, you can see the historical returns. If you choose to invest your retirement TSP money in an individual fund, keep this in mind. For the high risk, the I fund doesn't perform as well as the others compared to the C and S funds. Now that we know which individual funds performed well and which ones didn't perform so well, let's go ahead and compare them to the life cycle funds. Remember, the life cycle funds are made up of a mixture of the individual funds. Let's start on the TSP website. Go to Fund Performance, Rates of Return. I'm going to start off with all the funds and eliminate the funds without data because we can't use them to compare. Since they are new, they won't have performance rates of returns yet, so let's leave them off for now. Let's eliminate 2025, 2035, 2045, 55, 60, and 65. I do want to call out 2018 because as you can see, higher risk leads to higher losses that year. That said, remember you're in this for the long haul, and short-term losses can be offset by other years that have gains. Now, let's compare the individual funds to the life cycle funds and see which ones have done better. From this chart, our top 2 overall winners, the funds that performed the best in 2020, you get the C and S funds, which even when stacked against the life cycle funds, beat them out for rate of return in 2020. Then let's look at the bottom two, the losers, if you will, who had the lowest rates of return. And those would be the G and I funds. After reviewing the 2020 TSP fund performance, we can see that a key takeaway is investing in individual funds can yield larger returns. As you saw in 2020, the C and S funds outperformed all the other individual core funds and the life cycle funds. That said, be aware that in years like 2018, you can be more affected in years of losses due to the high risk. All right, time to get to the good part. Looking forward to 2021, because bye 2020. Now that 2021 is approaching, it's time to think about your TSP investing strategies and what you want to do moving forward. The way I've broken it down is I'm going to share with you 3 types of investors, and you have to think about which kind of investor you want to be. There's the play it safe investor, the risky investor, and the lazy investor. Let's start with the play it safe investor. This is someone who wants little risk. Maybe they're going to be retiring soon. Think 2025, 2030, and so they want to allocate their funds into something stable and safe so that in case there's a market downturn and they need to start taking money out for retirement, they don't have to worry about it. This play it safe TSP investor is looking for low risk and stable rewards. Options for the play it safe investor include the G fund and the life cycle 2030 fund. Since the G fund is based on treasury securities, it historically has had positive returns no matter what year, but you will note they are low. For people who are retiring soon, they tend to move more of their investments into the G fund because it is more stable and they will be taking out money shortly. This helps them avoid short-term losses, and the mantra here is low risk, stable reward. Next is the risky investor. This is someone who takes on higher risk with the potential of higher rewards. Typically, a risky investor has some time before they're going to retire, maybe 2 to 3 decades, and so they can weather some short-term losses for potentially higher gains in the long run. People in their 20s, 30s, and 40s tend to lean towards being more risky given that they have more time until they retire. The options for a risky investor are the C and the S individual funds. Looking at their risk, you can see that it's higher, but their rate of returns, both in the short term and lifetime, tend to outperform any other funds. Compare that to the I fund, which has high risk and low rates of returns. You do have to keep in mind that there is no guarantee that past performance will predict future performance. And so just because the C and S funds have been doing well in the past overall doesn't mean that that will continue onto the future. And so if the S&P 500 or Dow Jones Industrial falls, that will affect the C and S funds. If you are willing to take on the risk to see if the C and S funds continue to outperform, these are the funds that you want to look into. So for someone who's willing to take on the risk and be a risky investor, but understand with risk may come reward, picking the C or S funds may be a good option for you, especially if you're not going to be retiring in the near future. Last but not least is the lazy investor. This is someone who basically just wants to put their money away and not have to think about it. Maybe they don't have time to manage their retirement accounts. Maybe they just don't want to have to read up on it and be active. But this is for the person who just wants to put their money in the account and not think about it and let somebody else, maybe in the TSP, manage their accounts for them. Options for the lazy investor is the life cycle fund. And remember, the life cycle fund is based on the year that you want to retire. So let's say I want to retire in 2050, 30 years from now. I would choose life cycle 2050. And what's nice about this is some professional in the TSP is going to be managing the life cycle. So I don't really have to reallocate where I'm putting my money into. Somebody will already do that as time progresses and I get closer to retirement. All I have to do is choose a life cycle, continue to put money monthly, and I'm done. I'll just check on it every so often, every once a year, maybe once every 2 years. And I don't have to worry about managing and changing the different allocations. Somebody else is doing it for me. The life cycle funds seem like a good deal for someone who doesn't want to actively invest or manage their funds yearly. So those are the different kinds of investors and the 3 strategies to think of when you're entering 2021. Do you want to be the play it safe investor, the one who invests in the G fund or the Life Cycle 2030 fund? Or do you want to be the risky investor, the person who puts their funds in the C or S fund or a combination of both? Or do you want to be the lazy investor, the one who just chooses a life cycle and lets somebody else manage it for you? That's going to be up to you to decide what best fits the way you want to invest next year. For me, I'm not saying that any one kind of investor is better than the other. Each kind of investor has different needs and motives for why they choose what they want to do. I'm also not advocating for the kind of investor you should be. Ultimately, it's up to you to decide which 2021 strategy best fits your investment goals. The last point I'm going to make is how often you should be checking your TSP investments. For someone like the lazy investor who probably doesn't really want to check it actively, they can maybe check it once a year, once every 2 years, once every 5 years. I mean, for them, they've chosen somebody else to manage their funds in a life cycle, and so they don't really have to be as active when they're changing the different allocations. For someone who's more active, I suggest at least checking once a quarter, if not at the very minimum once a year, because I like to check in on those quarterly statements that the TSP sends just to see how I'm doing. Even for someone who's more active, you don't have to check it every day. I don't. It'll probably make me crazy, and you can't buy individual stock. So a good practice to have is to check it at least every quarter when you get your statements, or to do it once a year where you're checking on your 12-month rate of return. That way you know how to plan ahead for next year. As you're starting to think about your 2021 strategies for investing in the TSP, I hope this information makes understanding the TSP easier. Good luck in choosing your funds, and if you have any questions, feel free to use the comments below. Happy to help where I can. Now, if you found this video helpful, you know what to do. Go ahead and click that like button. Thanks for the support. And if you know anyone who works for the federal government, is trying to understand more about the TSP, or thinking about 2021 investment strategies, please send them this video. Also, don't forget to subscribe to my YouTube channel so that you can learn more on personal finance and get updates every week when a new video is released. See you in the next video. Wait, you're still here? Check out these other personal finance videos that I think you'll enjoy. See you in the next video.